Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your financial market update for this important Tuesday, the 6th of June, 2017, about 4:15 p.m. Central Daylight Time. So the API numbers came out about 45 minutes ago, and while the market closed up, let me tell you, the headline number, the crude stocks dropped over 4 million barrels. Let's applaud that. Then the ugly number. Gasoline and distillates up by more than that amount. Therefore, the net is a gain again in stocks. That's not good. The crude cannot keep getting itself, if you will, reductions if you're building the stocks in gasoline and distillates, and that's how the market's going to view that, I think. Do I know? I think. That's all you can say. Now the market will turn its gears and eyes towards how the EIA views the numbers. If it's the same, it's not going to be a very strong number for those markets yet. The chart action looked a bit encouraging today, especially in the nat gas, which is going to see now weather changes in the U.S. where we start getting finally, and the word is finally, into those 90-degree days, starting probably the end of this week in parts of the Midwest, then it moves to the East Coast. In the stock market, here's what you're dealing with, and it's so simple. You're dealing with Thursday. Everything else, every piece of data other than that, so what? You're dealing with the UK election. You're going to wake up in the morning to the first thing, European Central Bank, monetary announcement, and then Mr. Draghi's conference, and that all happens early in the morning, so be ready for that. That'll move the markets. And then as the day goes on, we've got ex-FBI Director Comey speaking in front of the Senate Intelligence Committee. Now, my take on all three. Unless Mr. Comey really drops a bombshell, which I don't expect because looking at his career, had the president directly say, you're not going to do something to Mike Flynn, versus, well, he's a good guy, things of that nature in conversation. Even though it's inappropriate, no question about it. Is that trying to tell the FBI director not to do it? I think the president will walk out of this one relatively, key word, relatively unscathed. Not that he did the right things, shouldn't have even brought it up. UK election. Let's assume Miss May in the snap election doesn't get what she wants and doesn't, because she called the election, get even a bigger backing in Parliament. Is that enough to take the world apart? No, it's Brexit. Europe's still going its way and they're going to go theirs. That leaves the European Central Bank announcement, and I think they're going to sit pat because they have the same problem the U.S. does. They're not seeing the wage inflation, and things at best are iffy at this point in time. So that's my guess on it. What have we seen? We've seen properly the safe haven trade where the yen just has rallied up rather smartly over the past week, week and a half. The dollar's gotten hit fairly hard. The gold and the silver up and away. And the bonds and the notes getting big gains. In fact, in the last 6 months, the close today for the 10-year note is the lowest in 6 months. That means since President Trump has been in office, the lowest 10-year yield. Important. We'll see how this all plays itself out, or if this event comes to an end in the safe haven after Thursday. So as I come to the Dow Jones, and I'll go back to that on the daily charts, you can see how you've gone from 20,311 to 21,227, and you're sort of stalled right now on the weekly chart. And the reason I went back to the Dow, didn't rotate to the NASDAQ, is the NASDAQ has been, to this point, the best performing of the indices. Today it wasn't, and I'll show you why in a moment. When you come to the area chart of just closes on a daily chart, you've gone from 20,605 to 21,203, and now you're backing off from that about 50 points in round figures so far. As we take a look at how the market's going in a thrust, I'll call this an up thrust. You've gone from 24,474 on up to 21,227. You'd have to break through this low. You see it right here to get me convinced that the market is losing that particular thrust, and that number's 20,929. And interestingly, the market is not trending on the swing line. What you have is a pattern of a high, higher than a previous high and the most recent break low under a previous one. We don't know where this low is going to end up just yet. Should today or should tomorrow take out today's high and the market close higher, well, then you would have higher lows and higher highs. So that can change the pattern, but we're not into tomorrow yet. If the market pulls back, where might support be found? I would say 20,956, the 18-day moving average of closes, which happens to also be over the last break low of 20,929. In terms of resistance, you saw that on Friday when the market got up to the upper Bollinger Band, and since then, the market is sold off very nicely from 21,227 to a low today of 21,114, over 100 points. As we come into the slow stochastics, they are embedded. So the pullback as it's taking place is not changing the momentum of the market, which is locked into bullishness, and it's a way of saying pullbacks in the market are still being bought by the pros unless the red line closes under 80. In other words, you lose the embedded reading. Therefore, I think pullbacks in this market are still what pros are doing. They're buying them. In the NASDAQ on the daily chart, you have a key reversal, outside day down. Now, does it have meaning? So far, nothing has had meaning to the bear side in the NASDAQ. It has been the strongest of all the indices. It still has its embedded reading. If it were to have meaning, and if the market, and these are big ifs, wanted to break down, maybe 57.44 could be the number, but from here, that's over 100 points. That'd be a pretty nasty number, so I have my doubts about it. 57.6375 was the last break low, and that is about 100 points lower. I don't know that you have enough momentum to even do that. So what does the break mean? Well, so far, nothing has stopped the NASDAQ, and I wouldn't put anything in its way. The E-mini S&P is backing off with a second day of a correction, but here too, we have bullish embedded readings. When I have bullish embedded readings, it takes over the whole chart. This is what I focus on until it's lost. So until it's lost, I say the pros will continue buying these markets. The Russell's a whole different world. The Russell is now a market that's simply overbought and trendless. The market traveled last week from the Bollinger Band bottom to the top. And remember what these black bands do for you. A Bollinger Band, in its simplistic form, gives you an idea of a resistance and a support point. The market will trade within those points 95% of the time. The other 5% of the time can be spent outside of the band to the top side and or downside, and the band doesn't stay sideways all the time. It eventually trends, and you can get trends like this, and the bands widen out, so on and so forth, as the market enters a trend. It can actually get quite steep. But more times than not, before a big move happens, the bands will narrow in the Bollinger Bands and just trade between them, and right now that seems to be what this market is doing. In the VIX, while you have a bearish embedded reading, and that is exactly what's in play here, until that is lost with a close over 20 instead of under like on the others, I think the pros are doing what? I think they're selling short. And again, this market had a chance to really break out to the downside and did not while this whole move happened. Now, some people should say, Ira, could this be a shoulder, a head, and a shoulder? A head and shoulder formation? You better say that. And if you closed under 958, some people might say it's either extending the shoulder or it's a breakout to the downside. Something to look at. Where's the resistance? 10,093, and I think the pros will sell into that as long as you have the embedded reading. Lose the embedded reading, I think they'll cover those shorts. In the T-bonds, this is the safe haven trade. It's been the safe haven trade, and look at how this market's gone. You do realize, if you go to the CME's Fed Watch page, you still have a monster of a number that the Fed is, the probability that the Fed is going to raise interest rates at its June meeting. Where the market is seeing the flattening of the curve yield changes, maybe the September trajectory for an increase and the December. Look for the Fed to possibly start talking about that come next week when we get the FOMC announcement, and Janet Yellen will speak at that time and take questions, and I think that's going to be the question that we all ask. Are they thinking of changing their dots? You know what those dots are, how many more interest rate hikes you're getting this year. The Fed is not ahead of the curve in this case. I think they're going to stay behind the curve and keep that door fully open, not say, nah, they're pulling back from that. In the 10-year note, you can see how you've gone, and today with the embedded reading, 2.143%. You know, all the mortgages that people want, if you try to call a mortgage broker, their phones are ringing off the hook. It's summer. The supply of homes are not large. Interest rates are dropping like a rock again. It's buying time for a lot of those homes. Dollar index. There is nothing that looks bullish on this chart. Lose the embedded reading, and I would think you're going back to the 18-day average. Don't lose it, and I will not be surprised to say that I think, and I am saying, that the lower Bollinger Band is still a live target at 96.03 one more time for you. Last, we get over into the June euro currency, or one of the last charts here. Higher lows, higher highs. You turn the trend up. Now, you can stall out here by taking out yesterday's low in the euro, and that could give you a pattern of lower highs, lower lows. But as long as the slow stochastic stays embedded, the market stays bullish. In the British pound, I'm going to say it again. Why would anyone trade a position going into the EU election? Even if Miss May wins, by how much? Is that considered bullish? Is that considered bearish? Way too confusing, and it's of no surprise to me that you're just trading sideways at the 18-day average of closes, nor am I surprised from a fundamental point of view that the yen is soared because it's a safe haven trade going into Thursday. I want to go on record saying I will not be surprised to see the peeling back now, starting today through tomorrow, of some of this safe haven trade as the market gets itself into that analysis of what all happens on Thursday. In the crude, I would be prepared to say if you take out 48.42 that the market's in line to challenge the 18-day average of closes. You're oversold. You had an API number tonight that is not all that friendly, so if you go through yesterday's highs, I would think that maybe it wants to get back to that neutral point, that line in the sand, as I so often call it. And in the gasoline, look at the lower Bollinger Band. So now I've traveled from higher to lower, and here too, I'm a little concerned though. Why am I more concerned about this than the crude? Because you're building gas stocks, and you're building them big. June 6th doesn't seem right. You should be drawing them. Natural gas, well, the market finally cleared 305.10, but it still has the embedded reading. Lose that, and I think you should make an argument for yourself that prices might make a run back to the 18-day average. Until that occurs, the bear trend's in place, and you got to keep your eye on weather because that's going to determine what this all does. I'm going to be writing like mad about the Wednesday event. If you don't get my newsletter, you probably should. Now, if you haven't tried it, and you watch me on all these videos, I don't know why you're not doing it. It's part and parcel of my charting course when you first take it. In my charting course, I give you the newsletter. It's a $60 a month value. In my charting course, I give you charting software to work, actually $99 value. That itself is what, 99 and 60, 156. The whole course with the 54 videos is $99.95. So basically, you pay the $99.95, and I'm giving you another $156, $59 worth of value free. I think it's a pretty interesting deal. And you're going to learn how to work Bollinger Bands with all the technique that I have. Window envelopes, which I don't even talk in my videos. Folks, they're really important. Then you're going to learn how to put on all the other tools, all the key moving averages I work with. These are window envelope numbers. They show you where to put them, how you put them on the chart. And of course, then my newsletter, buy here, sell there, put a stop, and so on, and all the updates. And then I cap it off with the what? My morning video. And that is so important because I review everything you learn in the course step by step here in that subscriber video with the trade recommendations. Call my staff, 866-973-2077. You can go to our website, www.iraepstein.com. Go under the keyword education. Go down to the course, purchase the course. You'll see a fact sheet, everything you need right there to learn about it. You can click up here in this form. If you're watching me on YouTube, we'll take you to the subscription page for the chartings, for the course itself. And if you haven't tried any of my research, well, if you're watching me on some of the websites, it'll say, click here for Ira's free offers. Be sure you do that. I'm Ira Epstein. Good to be back. Missed yesterday, but I'm back in the saddle now. Talk to you tomorrow.